Hello, hello, hello. Welcome to Al Stock Trades. Now, the search criteria for this specific video is going to be low. Not a lot of retail investors are going to be Googling this type of stock or searching it on YouTube because many retail investors don't know where to start and how to find this stock. So if you are a retail investor and you have stumbled upon this video, my congratulations to you. And, I really consider you subscribing and comment down below how you found this stock. So, to all of our subscribers and members, I wanted to just go ahead and reiterate this to our YouTube subscribers here. In this video, we're going to be talking about Asbury Automotive Abg stock. Okay, and no, this is not an arterial blood gas, right? This is a particular company that deals with automotives, and we're going to go ahead and break it down. Just very quickly here, I wanted to go in and talk to you guys. What we're going to be doing is, earlier today, we've talked about how we went ahead and utilized criteria on how billionaires search for stocks and how hedge funds look for companies to invest in. And we are going to be making a video of all of these stocks and analyzing all these companies here. The first one, obviously, is Asbury Automotive Group, ABG. And these are the criteria that we worked on, and we teach this in our Mastering Stock Market course. The reason why I'm talking about the specific stock is it's currently trading at $1.81. There's an intrinsic EPS calculation of $1,200. And if you look at all the first and second and fourth DCFs, it seems that there might be some value here. So we're going to go ahead and we're going to break down this company. Now, if you want this specific stock screened, there'll be a link down below where you can essentially put it's Al Stock Trades /B/stock screener. There'll be a link down below where you can go ahead and put your email here, and then we'll send you off the specific searched Excel screen, which gives you all the intrinsic value calculations. And this was screened in December 11th, so today. So without further ado, let's go ahead and let's talk about ABG stock. So what is ABG stock? And, let's go ahead and just kind of talk about the name of it, right? So this particular company operates automotive retailers in the United States. They do services such as, they sell new and used cars, vehicle repairs, maintenance repairs, collision repairs, and they provide financing and insurance, and definitely does a lot of, in terms of debt calculations, and overall they have around 205 new vehicle franchises representing 31 brands, and they're growing and they're continuing to buy out other dealers. They were made back in 1996, and they've been going on strong since. So just very quickly here in terms of the used cars and all that. Obviously used car prices have been trickling down, and we're going to be putting that into our calculation, and we're going to essentially be removing the great years of 2020, 2021, and a little bit of 2022, because we believe those are flukes. We're going to remove those, and we're going to analyze the stock like we're back in 2018, okay? And that's pretty much where we're going to be at with this company. We're going to do some analysis on it. Now, let me just give you some fair warning. I've been doing this for 10 years, so just to kind of heads up, you may have noticed this already. But usually, when you look at dealer stocks, like automotive industries, they tend to trade, because no one really understands kind of like how they work and everything. They tend to trade at a PE value that is a lot more beautiful and undervalued than that of the PE of the general market, which means that you really have to knock down a lot on not necessarily the growth rate, but really be conservative in your calculations, which we'll go ahead and make sense of right now. So let's go back here. So overall, if you look at from left to right, so we'll start here 1, then 2, then 3, then 4. If you look at the year to date, this particular company is up 4%. On the year to date, while the S&P 500 is actually down around 17 to 20%. So this is outperforming the market. In a year from now, they've beat the market, they're up 9%. And if you look at 5 years from now, they were up 178%. And if you look at max, they've been up 1,000%. Okay. So overall, let's go ahead and let's break down the financials of the company. So if you look at the revenue, The revenue has gone from 4.6 billion. Again, these numbers are in millions, right? And there's 1,000 millions and 1 billion. So this is 4.6 billion. And if you look at 2022 TTM, we're looking at $14 billion. So as you can see, not only has this company increased its revenue, it's increased its gross margins from 16.5% all the way up to 20%, meaning that for every dollar that they get in, they get to keep, essentially more of it as the gross margins increase. So if you look at, again, the whole thing with operating income has increased. Net income has gone from $82 million to 785. Obviously, like I stated, we're really not going to be using these years. We're going to stick around to this slow growth rate because this growth rate just jumped dramatically. I mean, just look at the net income. It went from 254 million to 500 million to 784 million. So we want to undervalue the company so we know when we can get a good deal. Okay. And because normally when this is why the Mastering Stock Market course intrinsic value calculation is superior, because if you go ahead and do an automatic intrinsic value calculation, you're going to get a really silly number, a number that is literally in the $1,000 range. So obviously not something that we want to use, right? Sorry, this one here, $1,200, right? And we'll make sense of that. And if you look at earnings per share, back in 2012, they had around $2.61 earnings per share. And you can see how that's gone up beautifully. If you look at the shares, they have been minimally diluted, AKA, I'm joking. They started from 31 million shares, and now they only have 22 million. They haven't been diluting. They've been buying back shares. They've been buying back shares because they know they're undervalued. Okay. Now, if you look at book value per share, the book value is if this company were to be liquidated today, how much would it be worth? So obviously right now, back in 2012, it was worth $12.95. But you can see this company has literally gone up in its book value, a little bit depressant here, but overall now it's worth $119 per share. So obviously this company values its shareholders, and these are the types of companies that a lot of investors and like to look at it, and it's more predictable to project. Now, if you look at free cash flow, and this is a great exercise, you can kind of look at how it was negative, then it was positive, then it was negative for 1 year. And you can probably track this with its stock price. It's really marvelous that we can do that. It's all mathematics, which is what we want to teach. And if you look at the free cash flow, it's definitely been going up in the right direction. Same thing with working capital. All right. So now that we did this, I want to pay close attention to the current ratio. So the current ratio is above 1.5. Again, we like it like that, but something that to pay close attention to is the debt to equity. Now, normally we like companies with a debt to equity ratio under 0.5, but this one's around 1.3. So now you need to go a little bit deeper into their short-term assets, short-term liabilities, long-term assets, and long-term liabilities. And I believe in this company, they're pretty sufficient and they are able to pay off their liabilities. And it's very clear, as you can see from these calculations here. Okay. A little bit high on the debt, though, for my opinion. All right. So now remember this screening tool that we use to essentially search for stocks using the criterions that essentially billionaires use to essentially find stocks. So we've taken this particular line here and we implemented it here. So currently the stock price is selling at $181. And obviously within these calculations, it's stating to me that there is some value. Okay. So let's go ahead. And first what we did is we utilized a proprietary brain machine bot, essentially, which connects to a larger server where you search for price target consensus. Now, what is price target consensus? This searches the database for any analysts that essentially, strong analysts that have essentially put a price target on ABG. And you can see the price hovers anywhere between a target low of $135 to a target median of $170 to a target high of $205. Obviously, there's more price targets, but these are the ones that are being registered. Okay. So the first things first is we can do an intrinsic value calculation on the company. This is going 10 years into the future to 2023 and discounting back at a 10 to 15% discount rate, even 20 for a recession case, using a 2 to 3% perpetuity model divided by the number of outstanding shares. So overall, if you recall, normally I don't really like to include negative on the free cash flow, but because this company is quite, let's say, dealers are different in terms of, when you start doing a bunch of intrinsics, you start to have different ways you do intrinsics for different companies. So what we've been doing here, we're going to negate a lot of the free cash flow that was extremely positive, and or we can include them. And what we're going to do is we put a lot of the negatives. We took the crap and the good and we implemented it together. But most importantly, when we took the revenue growth, because they're growing right now at 60%, and we know that's unreasonable. I believe they're growing 50 to 60%, but that's because of this crazy car boom cycle, the supply chain issues that we've been experiencing. That's not going to last long. So we stopped it at 2019. So we took the net income from I believe was it 2012 here. Let's see if we so 2019, $184 million. Okay. So we took the net income from 2012 to 2019, excluding the crazy years where interest rates were, near zero and the supply chain issues, and we have a growth of 11%. So we know that the recession level is $1.03. The bear case is $1.80. The base case is $2.32, and the bull case is $319. Okay. Now, if you look at the book value of this company, it sits around almost near the recession case, but a little bit over, right? So it's interesting that we have this. And so as you can see right now, and we should have put in the share price here, we got this price target by just putting in the financials. We took nothing from the stock price. So overall, this does seem like a company that could double in the next couple of years. And if we were to go deeper, which we have to when we have a book value type stock, we use something called our book value calculation. And normally we haven't used this on our YouTube frequently, but we used it now. We took the older book value in 2012 and we took the current book value in 2022, and we went ahead and we essentially utilized an average book value growth at 29.67%, using a 10-year dividend history of 0 with a 10-year federal note, which is the 10-year treasuries that they like to estimate probably from the federal funds rate, which we talk about all the time, which gives you the share price of $331, which I believe is around the price target of what this company could be worth. So this is essentially and again, we use a lot of big words here, and this, when we break these down and we teach these components in our Stock Trades platform, but overall, we're going to go ahead and we are going to be going down the list in these stocks, and I want to go ahead and get them all done. And then a year, 2 years from now, we're going to revisit these stocks. So, and we're going to see how well they performed in essentially to show you exactly how these billionaires search for stocks and how to use intrinsic value calculations to find companies that will essentially make you money, not 10x, but take your billions of dollars of wealth and be able to slowly increase it over time. If you want access to that, there'll be a link down below at the stock screener where you can be able to get it for free. Just sign it up and we'll send it to you. Very quickly, we're going to go ahead and we're going to look at these questions. Exactly. And that's something that the EV movement, so they do sell cars. So potentially they could buy those cars out and they could buy the dealerships for those cars for third party. And they definitely could go ahead and purchase those. Also, there's used Teslas that will be on the market soon. It is making hard to compete against Tesla, Lucid. Exactly. The direct sales is definitely something that you want to look at, because the way you purchase a Tesla is you don't really go to a dealership. I mean, yeah, you can test drive one, but really you just purchase one and you just go in there to take delivery, and you just go in the room and you just sit in the car and you go home, right? Correct. First line, Ford has changed some of its rules trying to weed out dealers. So yeah, so overall, this is one of the companies. And it doesn't mean that because it's undervalued, it means it's a good buy. But this is good practice, and this will be great to introduce you guys to different companies out there. So the more you learn, the more you can put under your belt. And I believe that you will soon recognize a pattern, an art of investing. All right, guys. I appreciate all of you, and I'll see you on the next one.